Holy brand, thank you, brother. Right. All right, so let's just get started. Welcome, guys, to the second episode of the Lion's Share podcast. My name is Hamza Hamid. In today's video, we're going to be talking about mastering swing trading. What is swing trading? How to get better at swing trading? What the difference between day trading and swing trading is. Okay, so essentially, right, you could look at swing trading with the same concept as sports, right, or football, right? Everything with swing trading and sports in general, a lot of it has to do with timing. You have to time the market properly on a longer term horizon. And you need to have a proper strategy. You need to have a proper time when you're going to make your move. So swing trading allows you to do that in the market a lot more easily, right? So in the first episode, what we were talking about with the first episode was how to get started as a trader, how to, become a professional trader to start with, what to look for, what indicators to use. And I went a bit in detail in the first episode, so definitely check that out. But in this episode, it's going to be the next step. So great, now that you understand the basics, there's different ways to make money. There's different ways to trade. And swing trading is absolutely my bread and butter. Like, it is my favorite way of trading. And it is just, I love it. I love it, honestly. So personally, right, swing trading is generally harder than day trading because with the difference between the two is day trading, you buy and sell within the same day. Swing trading, you buy and you could hold at least overnight or, a few days or a few weeks. Swing trading is generally a bit harder because if you enter, you could be completely wrong. And for a very long time, you could be wrong. Day trading tends to be a bit easier because if you're wrong, you can just exit very quickly. But especially, swing trading does become a bit more difficult because the market moves overnight. So the market gaps up or gaps down very heavily sometimes overnight. So swing trading does become a bit of an issue just in that regard. But once you become good at swing trading, there's nothing that beats it. Honestly, if you could perfect it if you get your timing proper, if you have a proper strategy of risk management and everything, swing trading is like the best. So, essentially, like a few reasons why like swing trading is definitely like why I like it a lot more is number one, you can capture a lot of the overnight move. So if you're correct on a position, you can catch a large portion of the overnight move that's going on. Say, for example, you're long on NVIDIA, right? If NVIDIA launches good news and it's up 4% overnight, your swing trade is up a lot, right? As opposed to if you're in a day trade, it's not going to go up that heavily intraday. Does that make sense? So if you're correct on the move, number one, swing trading gives a lot of upside potential with overnight moves, right? The second main reason why I like swing trading a lot more is because it takes the stress away from trading. You are able to focus way more clearly on the trade because you're not worried about like intraday volatility. You're not worried, oh my God, oh, it just moved like this. Oh, the market just moved this way, moved that way. Oh, I have to, you don't get as anxious if your risk management and your position size is proper. Okay. Yes, if you're in a large overnight position and there's like news coming out, then yeah, you're going to be stressed out. But if I'm talking about if you're doing everything properly, if you're not throwing your entire position, your entire portfolio into a trade and you're letting it ride out, it becomes way more comfortable, way less stressful swing trading. So it's definitely really good. So how do you become a good trader? How do you become a good swing trader? How do you become a good swing trader? Number one is you have to identify the overall trend of the market. These past few years, especially when we all like really became, I'm sure many people became really focused on trading over the past 5-6 years. The market has generally just been in an uptrend for 5 or 6 years. Yes, there are amazing times where I've always caught tops and bottoms, but generally for new traders, right, it becomes very easy when you're just looking for good long opportunities. Because by default, you have to realize what moves the market. Do we move the market as retail traders? Absolutely not. What moves the market? Institutions and banks with hundreds of billions of dollars move the market. What are they doing? Primarily, they're looking to add to long positions. So when there are good long opportunities in the market, that's when it becomes a good opportunity for us as retail traders to also lean long. For example, if you were looking at the COVID crash, right? If you started to go short when the SPY was below 250, if you began to short the SPY below 300, below 250, right? You're down a lot of money. You lost a lot of money trying to short that weakness. Instead, what did these banks and institutions do? They bought the dip. They went long. So as retail traders, it's very good to lean long on the overall market as there's weakness. Does that make sense? It becomes much easier. So especially when you're a new trader, especially when you're a new trader, you should be focused primarily. You shouldn't even bother looking for short opportunities. You shouldn't even bother looking for opportunities where there's market weakness. Oh, I'm going to take a short here. Don't even bother. Your main strategies that you should be looking to perfect are good long opportunities. Because why? Because there's wind blowing into your sails during that as well. Because institutions are going to be basically along your side. Does that make sense? If you're trying to go short, institutions generally do not really do that. So it's much easier to go long, and it's much easier to play along the trend. The trend for the past few years has been very bullish. You could use different things to see the trend. For example, how do I know if the trend is bullish? How do I know if the trend is bearish? You could look at the simple moving averages. For example, if the shorter term moving averages, like the 10, the 50-day moving average, are above, if they're trading above the 200-day moving average, that signifies that the market is strong and we are in an uptrend, right? If the market is weak, then there's a thing called a death cross, where the 50 simple moving average crosses below the 200, which starts to show bearish momentum. A 50 moving average crossover above the 200 is called a golden cross because it shows bullish momentum. So you could use moving averages as well to show market trend. You could also use technical analysis. Technical analysis, you could draw technical patterns to see, okay, this is a clear uptrend. I can see support being touched on multiple levels, and the market is moving up. As it's continuing to move up, I can clearly see that the market is bullish. If the SPY has risen from 300 to 600, are we in a downtrend? No, because the market is up 100%, brother. If Apple, if NVIDIA, if large stocks are all rising, if the NASDAQ, if the S&P are all rising, very clearly we are in an uptrend. Now, you could look at things on a smaller time frame. Sometimes on a smaller time frame, the market does seem like I hope what I'm saying makes sense. Like, I don't want to just jam down a bunch of information. But I hope what I'm saying makes sense, because genuinely, it's so important for people to understand how to check market trends. And especially with day trading, especially with swing trading, right? Day to day, there might be fluctuations. There might be a big red candle. There might be a big green candle. But if you zoom out, and the four main time frames that you look at when you're swing trading is the monthly time frame, the weekly time frame, the daily, and the 4-hour. If all four of those are showing strength, if all four of those, the moving averages are trading above price and we're showing strength, right? These are good indications that the market is in an uptrend. Once again, it's just super simple to just lean long overall in the market. And that's just, it's one of the most mindless things that you could do, but it genuinely has been working very, very well. So, like, where do you find good places to go long when you're swing trading? How do I find a good strategy to look for these good long opportunities? There's a few of them. There's quite a few of them. So number one is, I'm sure many people have started off learning about the RSI, right? If the RSI is below 30, that is a general good opportunity that the market is very overextended to the downside. If the market is overextended to the downside and showing a lot of weakness below the RSI being 30, this is one indication that is a good long opportunity. The other thing is when the MACD indicator is very weak, right? That is also another variable that we look for. And our job as traders is to add all of these different variables on each different stock to make it so that we get a better, so that we can make a better decision. That's all it is. That's all that trading is. Adding to the variables that we look at so that we can make a better trading decision. Okay? RSI oversold. Bollinger Bands. If the Bollinger Bands are trading below if the stock is trading below the lower level of the Bollinger Bands, generally that's a really good opportunity to go long as well. And that's something that I teach in my YouTube videos all the time. That's something that we look for. The RSI, the Bollinger Bands, the MACD. You look for retests of these major moving averages. So you could look for a retest of price hitting the 50 moving average. Look for a retest of price hitting the 200 moving average. These are all genuinely good support levels in an uptrend. So on the weekly time frame, the 200 simple moving average is a different number than the daily time frames 200 moving average. So you look for where all of these prices converge, and you look for opportunities where price is touching those levels. Generally, those become good opportunities for market to stabilize around and bounce. And then just to add to it, right? Just to really, really add to my point. If the Bollinger Band is weak, if the RSI is oversold, if the MACD is showing weakness, if we're trading at a 50 or 200 simple moving average on the daily or the weekly, if we're at multiple touches of levels of support, we just added a bunch of different variables to make our trading decision better, right? So for example, I have a 95% success rate for my swing trades for this year. We've taken about 43 of them. 41 of them worked. So I'm not just saying this out of, oh yeah, this is genuinely stuff that I do that helps, right? So what we need to do is we need to add to the variables to make our trading decision better. And the more variables that we have to make our trading decision better, the higher likelihood that our swing trade is going to end up working, right? So those are just a few of the different things that you look for. Of course, you also, especially when you're first starting out with your trading journey, you need to learn technical analysis. Understanding technical patterns, understanding candle patterns, understanding reversal patterns are all genuinely very, very important for you to understand, for everyone to learn, because that's an added variable. You don't just want to go into trading and just look at simple moving averages. That's impossible. You don't want to just go into trading and just look at technical analysis or just candles. You're basically hindering yourself from, you're keeping a veil over your eyes to different other things that exist. So you want to open your eyes and open your horizon, open your mind to every different variable so that you can learn a bunch of different things. Not to mention, this is all just based off of looking at a chart, right? Not to mention, you want to look at news. You want to study the market and the stock that you're trying to trade as well. You want to look at the news that's going on with the stock. If you could see that a stock can potentially make a partnership with another company in the upcoming weeks or months, that's another good opportunity for a swing trade. You could potentially see, okay, wow, this company is involved in trading uranium with this company over here. This company over here that trades uranium is currently in talks of having a deal with our country. If our country and that country start to have a deal, then these two companies that are trying to make a deal for uranium is going to skyrocket. So you have to look at these different things as well. You don't want to just focus on just the chart, especially with your different specific stock names. If you can connect the dots, people are paid hundreds of thousands of dollars to connect dots. There's entire industries based off of this. And then there's an entire sublayer of this called M&A. Like, there's people that look for good merger and acquisition opportunities for companies to work things out and to make things work out. So there's a lot of different, just sometimes you have to just think outside the box. It's not just as simple as just looking at a chart. To really, really capture a big upside move in a company that you don't see something coming, you want to study what you would do. You want to try to look at what you would do if you were in that position of power in that company. But that's a bit more complicated. For now, the main things that you could look at is those good opportunities to go long based off of looking at the chart. Simple moving average, MACD, RSI, Bollinger Bands, those things. If those are showing weakness, if we're at a level of support on the moving averages and on our chart, if the candlesticks are starting to show a bit of a reversal, all of those are good opportunities to basically go long. And, at first, especially with trading, going long becomes much, much easier than it is to try to go short. So if you are trying to master swing trading, try to master catching bottoms. If you can master catching bottoms, it makes learning how to catch tops that much easier. Because if you're trying to catch bottoms, right, and you become really, really good at catching bottoms on like weakness, you could eventually apply the same things the opposite way, trying to catch tops and go short. It's much easier to learn going long first because, once again, imagine wind on a boat. Wind on a boat, if you're on the proper side of the wind is just going to push the boat. The wind on the boat in this circumstance is institutions. Institutions naturally buy. They naturally go long. So it's much easier to find good long opportunities and go long in the overall market because institutions naturally go long. So don't make things harder for yourself. Do not make things harder for yourself. I hope that makes sense. And of course, we went through the different ways of identifying the trend. We went through finding good entry points. One of the main major things that people look over and do not take into account is proper risk management. You need to have proper risk management. If you do not, what does that mean? What does risk management even mean? These are terms that I don't know what you're talking about, Hamid. What does that even mean? You need to allocate only a certain percentage of your portfolio into each trade because you're not going to be correct about every single trade. If you throw 100% of your portfolio into every single trade that you take, all it takes is one wrong move. And then you end up losing your entire portfolio. You end up losing 40, 50% of your portfolio for what? Because you didn't have proper risk management. You want to make trading work in your favor mathematically. If you're gambling, if you're gambling, if you're putting money on a parlay, if you're putting money in casino, you don't throw all of your chips into one bet, right? That doesn't happen. You put a certain portion of your portfolio into each trade. And the best thing about trading is you could have a stop loss. You're able to have a stop loss. So so the thing with trading is we want to control what we can control. We want to be able to control what we can control. If we are able to control how much money we put into a trade, if we're able to control when we enter a trade, the next step after that would be controlling when we want to exit it. So if a trade is going against us, say for example we go long. And we go long on a stock at $100. Before you even enter the trade, you need to know, okay, if the stock drops below $95, I'm out. I don't care what happens with the stock. I'm gone. I don't want to hold. You need to have that discipline. So that's the good thing about it. So if you enter at 100, great. I entered with 10% of my portfolio into this trade at $100. If it drops below 95, I'm out. I don't want to lose a big chunk of my portfolio being wrong because there's always more trades. So having a stop loss is paramount. It is very, very important with risk management. And that's something that a lot of people do not understand. So when to take the trade, when to exit the trade, how much to put into the trade. All of these things is very, very important. So, you could even have a stop loss based off of moving averages. You could have a stop loss based off of a lot of different things. But one of the simplest things, having a stop loss based off of price action. That in itself is fantastic. Exactly. The trick is not to let greed move your stop loss. Lisa, you're absolutely right. Do not start assuming that okay, wow, great. The market is going to start, reversing here. Let me just lose my discipline. You need to have that discipline. You cannot start marrying you cannot start marrying a position. You cannot start marrying a trade. If you're wrong, you're wrong. Move on. Recollect. If you're looking at the stock again at 94, is 94 a better time to go long? Maybe. But take each trade as a different trade. Do not marry it. Do not try to double down. That's how you lose your money. So, like, for example, once again, we can just bring it back to sports. Day trading is basically sometimes just running the ball, right? Or it's just short passes. Running the ball, short passes, shovel passes, just nice and quick, trying to get the first down. Great. A good swing trade is the equivalent of a really good pass that can lead to a touchdown. So a good swing trade, it's like the Big Short. The Big Short, they were expecting a big market drop. So they were holding on for days and weeks and months. They were holding on for a very, very long time. That's the difference between day trading and swing trading, is expecting that the market is going to end up dropping at a different date, right? So, yeah, if we can focus on properly adhering to proper risk management, stop losses, trader discipline, trader good spots to when to enter and exit, that's how you become a really, really good swing trader. And once again, one of the best ways to get to practice is to look for good long opportunities. So in the earlier part of the video, earlier in the podcast, I was going over what to look for, good spots to go long on the overall market based off of what indicators and everything as well. So, yeah, I just wanted to go over that. Another thing that I wanted to go over today with you guys is Warren Buffett. So Warren Buffett actually just made an update to his portfolio, and it is very, very alarming. In my opinion, it's very shocking to see Warren Buffett do this. So during Q4 of 2024, Warren Buffett, he sold 100% of his S&P 500 shares. He sold 100% of his Vanguard S&P 500 shares. He sold 73% of his Citigroup shares. He sold 30% of Charter Communications, 18% of his Capital One, 15% of his Bank of America. Mind you, 15% of Bank of America, 117 million shares. So he sold 15% of his Bank of America. He sold 7% of his T-Mobile. It's 322,000 shares. And he sold 12% of just different Media Corp and Louisiana Pacific Corp. What did he end up doing? So he sold 100% of his S&P 500. What the hell did he put his money into? He had an 86% increase in shares in Domino's Pizza. He bought 1.1 million shares of Domino's Pizza as he sold 100% of his S&P 500 shares. Let's just continue. Let's just go on. He bought 48. He added 48% of his portfolio balance, like in this trade, to Pool Corp. which is 194,000 shares. He bought 194,000 shares. He bought 12.3 million shares of SiriusXM. So this guy, he sold 100% of his S&P 500, Spider, and Vanguard. He sold 100% of the S&P 500. He sold 30, 70, 50% of his different bank stocks. And he bought millions of shares of Domino's, Pool Corp, and SiriusXM. So yes, we understand that Warren Buffett is the grandfather of investing. Great. Him, and then based off of Benjamin Graham, his teacher, you cannot take anything away from them. But this is very, very interesting. Warren Buffett was also the same person that missed out on almost the entire move to the upside during COVID. He was sitting in mostly cash from 2020 to 2022, 2023. I believe he was sitting in mostly cash. He missed out on the majority of the upside move. So, no one is perfect, obviously. But this is very, very interesting that he's doing that, and I'm actually pretty shocked that he sold this much of his portfolio. This is actually really, really shocking. We're gonna have to see what happens in the future, but he missed out on a lot of upside during COVID, during this entire bounce upwards. So I hope he doesn't miss out on the continued move to the upside in the overall market. But this is Warren Buffett, right? So if Warren Buffett legitimately sold 100% of his S&P 500 and a lot of his bank stock holdings, it's obviously not a great sign. But this guy bought 1 million shares of Domino's. His biggest add-on was Domino's, SiriusXM, and Pool Corp. It's kind of weird. But I'm not Warren Buffett, so definitely kind of weird. So man. I mean, this is just very interesting stuff. It just goes to show that there's a lot of things going on under the hood that we just don't really know. But man. I mean, that's the really main things that are basically going on in the market at the moment. The overall market is making new highs. The NASDAQ is looking to make new highs. The S&P 500 is looking to make new highs. GameStop should be very, very good soon in the next coming months. GameStop looks like a really, really good swing as well. But, we're seeing Google, Microsoft, Tesla, these large tech stocks starting to bottom themselves out. When these stocks bottom themselves out like this, it's generally a good sign that we will continue rising. So we're seeing Apple starting to make a lot of strength. Apple is showing a lot of strength. Meta, Netflix, NVDA, a lot of these stocks are showing a lot of strength. And it's very difficult to be bearish on the overall market when these stocks are showing this much strength. So yeah, in the next week or two, the overall market is probably going to make fresh highs again. The S&P 500, the SPY actually made new highs on Friday, which, we were long on the overall market. We were long. I bought the dip. We bought the dip in Tesla. We bought the dip in NVIDIA. We bought the dip in the S&P 500. We were long. So thankfully, we captured this move to the upside. But now the question is how much more room there is to go. So I do think, based off of what we're seeing out of the large tech stocks, based off of just the overall market strength and the trend, you should get a bit of a bounce. I'd be shocked if we don't continue to rise here. But this week might be a bit choppy. We have FOMC news. We have FOMC minutes on Wednesday. So that is definitely something that we have to take into consideration. This is also a long weekend. So the market is just opening tomorrow. That could also add to the lack of volatility, the lack of movement in the overall market. So that's another thing that we have to really take into consideration. But with that being said, I would be shocked if the market doesn't just continue rising. So thankfully, once again, this year so far, I have a 95% success rate for my swing trades. I every single time I'm entering or exiting any trade, I share it. So thankfully, it's been going really well. And if you guys want access to that, the link is down below or in my bio, wherever it may be. But for now, if you guys have any questions, feel free to ask. I'd love to help, and I'd love to answer any questions that you guys have regarding anything really. So for the next, bit of time, we could go ahead and do that. Let me know if you guys have any questions. Rob, thoughts on? There's a lot of messages. Goat, Suresh, Lazy Moons, Bully Brand, Breaker. Thanks for the valuable information. Tina, hey, Hamid, I just joined your Discord under Snowy. Looking forward to making dollars. By the way, most of the time I trade following my intuitions and I do well. Nice, awesome, Tina. Happy to hear it. Let me know if you have any questions. You need help with anything. Cheesehead, good evening from Wisconsin. Good evening, brother. Rob D, thoughts on SMCI? Okay. So SMCI is definitely there's room to go above. We could rally above 55. We could see 60 plus soon. But after a huge move like this, it's very, very difficult to just start leaning long. SMCI is up almost 100% in the past 2 weeks. So there's definitely a lot of room to the upside, but you want to be careful to be aggressively long right now. You would rather look for longs into weakness. Or if you do want to go long, a stop loss at 44, 45 might be a bit better. Candyman, do your indicators work for stocks? Yes. What are your thoughts on NPH? So NPH is going to be also like heavily dependent on crude oil and the energy sector. So we're going to have to key off of how well crude and gas prices do to see how EMPH is also going to be doing. Because I believe, off the top of my head, EMPH, it is, I'm pretty sure they have a lot of stake in not just semiconductors. I think they're, unless I'm thinking of a different company, they have energy stock. ENPH. Yeah. So it's going to be heavily dependent on energy related. So currently, right, we see that it's at, I thought I typed something wrong. Okay. EMPH looks pretty good. But, depending on how Trump affects gas and oil, we could continue falling, but ENPH definitely looks like a good long opportunity, honestly. If it can hold 60 to 61, this is solid. We could see above 70. We're also creating a falling wedge. It looks really bullish. I would be holding on to calls maybe for a couple months out. Should be a solid trade, in my opinion, on this. Bully, what percentage of your portfolio? So I'm not your financial advisor. This isn't financial advice. But what percentage of your portfolio do you use per trade? So depending on how big your portfolio is, generally the rule of thumb is you don't want to be above. You don't want to go above like 15. You don't want to be above 12 to 15% of your portfolio into any trade. Got it at 33, been holding. Nice. Tim, when you mentioned RSI below 30 as an example, do you look at that on the daily or weekly time frame? So I look at it, if it's below 30 on a weekly time frame, it's better. If it's below 30 on a daily time frame, it's good. But imagine, just think about it in the concept of day trading, right? You want something on the larger time frames to show much more. So if on the 1 minute time frame it's trading below the 30, it's not as good for day trading, or it's not as good for swing trading as if it's below the 30 on a monthly or the weekly, right? So the higher time frame, the better it is for the higher the time frame, the better the technical indicators affect the daily and the overall trend of the market. But yeah. Awesome. If there's no other questions about swing trading or things like that, then, you know, any other questions in regards to technical analysis or anything more related to that, you can just ask in the Discord, and I will go ahead and answer those there. But yeah, I hope you guys enjoyed today's video. Hope you guys enjoyed today's podcast. This is gonna, once again, it's gonna be a consistent thing. I'm gonna be trying to do this at least 2 or 3 times a week, so it should be good. I actually ended up doing, I had a very, very long workout. I didn't eat anything, haven't had breakfast, and I am very interested in eating food. So, yeah, it's pretty good. Pretty good night. Pretty good weekend. I hope you guys had a good long weekend. Honestly, it was, much needed. Got an extra day off, so that works. So I hope you guys enjoyed the podcast. Please make sure to share it. And, yeah, I hope you guys enjoyed. So I'll see you guys in the Discord. If you guys have any questions, please feel free to ask there in the traders chat, or yeah. So thanks again. All right. Love you guys. Thanks for tuning in to the Lion's Share Podcast, episode 2. Episode 3 coming soon. All right. Love you guys. Have a good one.